Time for a look at the cattle markets now, and our guest this week is Mike Briggs from Briggs Feed Yard in Seward. And with 2019 winding down, there are some things we need to be watching. Mike, thanks for being with us today. Where do you see cattle prices headed as we end the year and gear up for 2020?
Well, I actually went back and watched our last show, so I didn't repeat myself or look stupider. We talked about last time, we thought this thing would just grind higher, and that's exactly what it's done. And there's some things that are really good for once that are happening in the market. That plant that burned down, that was offline, has actually started to come online 30 days earlier than they thought it would. So that helps us. We've worked through our biggest numbers, and I think we're in really good shape. Now we're going to hit the holidays, and that's always a problem because you lose harvest days because of holidays, obviously, and your demand kind of wavers in there. But I think we've got a couple of good weeks here before the holidays, and you got to kind of stumble through the holidays. And then we get into that first quarter where I think things are much more in our favor because that plant will be up and rolling full speed. Plus, we're going to finally tighten up our numbers to maybe we've got a little chance to regain a little leverage with the packer.
And what's the overall herd looking like come January?
That's going to be a great question because we get our yearly herd size or inventory in January, and that's going to be really interesting because there was all the talk about all the calf losses in the spring. Well, nobody really knows. And the thing that's interesting to me is you have seen above normal cow slaughter the entire year. You don't have a drought. So why are you having this immense cow slaughter? Well, I think a lot of that is, and I've heard from different ranchers, that the conception rate out west is as low as 70%. So if you've got 30% of your herd that didn't breed, those guys don't keep those around. They send them away. So I think that may be where some of your cow slaughter numbers are. And so you may have had a bigger constriction in the cow supply than the market thinks. And that'll really make things interesting going forward.
Is it kind of a snowball effect? More slaughter this year means fewer cows calving next year, means fewer feeders. Would that be accurate to say?
That's actually right where I'm going. And, you know, we don't even know. Your placements in October were big, but they weren't bigger than the market anticipated. And it's going to be really interesting to see what we see in November. Maybe the calves aren't really there. Maybe we did lose a lot. Now, there was some really terrible reports earlier where it talked about we lost 1 million head. That's totally erroneous. That's not what happened, but it's starting to appear like losses were fairly significant. And like I said, that conception rate, you start taking those cows out of this deal, well then that goes into next year and the year after because it takes a long time to get that made back up.
I wanted to talk about choice and select beef too. For 17 of the 21 weeks from July 6th to November 23rd, the weekly average choice select spread was the largest for that week of the year over the past 2 decades. Explain to us what that means.
We actually talked about that in the last show. At that time, I thought it was interesting that the choice select spread at that time was $27. And we talked about anytime you see that spread, that's because there's an intense amount of demand for choice product driving that apart because there's only so much choice product. It also tells you that they don't want select because they're willing to pay for quality. And that's always good because the better the grade of the meat is, the better quality that meat is in theory. And so that's what customers want. That's what they like and they're willing to pay for it. And that's great to see. That also tells you that just demand is just flat excellent. And so that's really encouraging. When you see that close in really hard, that's a little frustrating because that means you're starting to lag demand a little too much.
Any other advice or preparations we should make ahead of 2020?
I think that first quarter next year is going to be really good, but the placements are all getting hammered against April, May, June, like they always do. And so I think it's imperative that you watch your break-evens and look for your opportunities. Now, they talked about us having a bad winter, and knock, knock, knock on wood, it's not been too bad. So hopefully we can get through this thing. But gosh, if that winter gets bad on us, you got to be careful. So you always got to be really prudent with what you do going into the winter with your risk management. But I think there'll be some real good profitable opportunities going forward.
And finally, Mike, December cattle on feed report next week. Give us an idea of what you think we'll see.
Well, once again, you want to see the placements because what that December report is actually actually what went on in November. And October and November feeder placements are usually really big. And I don't think November is going to be that big. You're not seeing the big runs in the sale barn. Now that's not trying to say that the cattle aren't there. I think because of these lower feeder prices, these guys have kind of moved their supply around, and they've started to wean their calves. They're going to come to market at different times, which is good because then we don't pile up so many fat cattle in a certain time period. But I think those calves are getting kind of massaged around a little bit, and the placements might be below expectations. We'll once again throw a little more gas on the cattle fire, so that would be good.